Take a moment, look at the disclaimer. This content is for educational, information, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. This is Rod from BTA, and we are known as the Middle Traders. We are looking at the VIX again. This is part 2 of when the VIX is like this, bad things happen. But now we're going to look at some of the VIX's family and friends, his crew, okay? His crew. Because when the VIX and his crew is like this, bad things happen. Now, we're going to look at it. We're going to be switching from the VIX, and over here I got the radar screen. You see, this is today's action, right? We live. You see the prices moving up and down over here on the radar screen. It's live. Okay, we live, baby. Right? We live. Right? So this ain't no screenshot stuff. We in real time, real life. All right, we trying to make some money over here. I'm trying to get y'all the real. This ain't no get rich quick scheme. You know that already if you've been following me. But you will get rich. All right? Now, we're going to be switching from the VIX to the Standard & Poor's. Okay, because I just want to show you something. Then we're going to talk about the family and friends. All right? I just want to show you something real quick that we just touched on in part 1. All right? So we're going to be switching from the VIX on the daily chart to the Standard & Poor's on the daily chart. Remember, we was looking at the VIX Spike History in part 1 on the weekly chart, right? Okay, I told you. When the VIX get above, this is the prices up here. When the VIX spikes above the upper Bollinger Band and the rate of change expands dramatically, bad things happen. Peak. Market drop. Pop. It's over. Okay? When the VIX spikes above the upper Bollinger Band and we get a dramatic increase in the rate of change down below, pop. Market drop. Pop. I'm trying to tell you something. I don't want you to get caught in this. We can see it happening before it happens, y'all. All we got to do is pay attention to the data. Now, when that VIX start coming down and get below the middle Bollinger Band, you see we got an expansion right here, but you see the rate of change was not as high. It was high when it first peaked here, and then it started selling off, ran up again. We pull them back. That's showing capitulation. That's showing extreme fear. Everybody's scared now. That's what it's showing you on the second run up. But the rate of change is not that high, right? Well, look, when things are getting better, the VIX is going to come down, get below the lower Bollinger Band. The rate of change is not going to be up in the positive. It's going to probably be more to the negative side, and you're going to see things looking better. You're going to see more negative changes in the rate of change of the VIX. That's good. We want it to be negative. That's saying it's coming down. Fear is coming down. People are not scared as they was before. They're not as scared. Fear is coming down. Okay, they sitting there behind down and relaxing. All right, that's what we want. And the rate of change to be negative. So we looked at that. But this is what I wanted to show you right now. And then we're going to look at the family and friends, because the family and friends of the VIX, when they looking scared and crazy, bad things happen too. So we got to keep an eye on the VIX and their family and friends. Okay? So now look. This is the weekly chart. Let's go look at that daily chart. I want to show you something real quick. Okay, I want you to go back to the market sentiment page. Look, here's the VIX. I told you, when the VIX is above the 5 and the 9-day moving average, okay, bad things happen. I showed you that. I told you that. When it's above the middle Bollinger Band, bad things happen, right? I told you that. I showed you that. Don't listen to me. Just look at what I'm telling you and see for yourself. And if I'm wrong, call me on it. Holla at your boy. Say, Rod, you're wrong. What, you nuts? Okay? But I'm telling you, keep watching. Keep watching. And then you might say, this guy ain't crazy as he act. Okay? Because I just be having some fun. right? Not as crazy as I act. But life is short. If you don't enjoy it, too bad for you, because when it's over, it's over. Now, this is a daily chart of the VIX right here. Look what happens when, look, I'm going to expand. Look, I'm going to expand this right here, okay? You see this vertical line right here? I'm trying to show you something. This is when the VIX prices. This is the price bars of the VIX, right? We got a 5-day moving average, a 9-day moving average in the green, 5 in the white, 21-day moving average in the red, 50-day moving average, in the yellow, 50-day moving average in the red. Yellow is the 21-day moving average. Sorry for that. But look what happens when prices get below the 5-day moving average, the 9-day moving average, 21-day moving average, and they start crossing below each other. The 5 crossing below the 9, 9 crossing below the 21. Look, this happened back on, I ain't going to go too far back in the history because I want to look at the family and friends, right? But we're going to go back to, this is 10/14/2021. Okay, 10/14/2021. You see, we got below, the VIX got below a 5-day moving average and the downward trending, and now the 5-day moving average is trending down. The 9-day moving average is trending down. The 21-day moving average is trending down. We below a 50-day moving average. I told you, when you're above a 50-day moving average, good things just don't happen. Bad things happen. When you get below all of that, good things are happening. Now look, this is back on 10/14/2021. Okay, let's switch now to the Standard & Poor, and let's go to 10/14/2021. Okay, here 10/14 right here, 2021. I'm sorry, I got my little vertical line on 10/15. So move it over one to 10/14. There it is. Look what happened. You got below the 5-day moving average, below the 9-day moving average, below the 50-day moving average. The VIX is below all of that, right? And look what the Standard & Poor does. It goes up. When the VIX is below all of that, good things happen. When it's above all of that, bad things happen. I'm trying to tell you something. Holler at me. Are you digging what I'm saying to you? Okay? So when the VIX is below all of that, good things happen. I already told you when bad things happen. When it's below all of that, good things happen. Okay? Let's go back to the VIX one more time. We're going to go a couple of times, right? We're going to look at it a couple of times. Look, we did 10/14. Let's go to 12/8/2021. Let's zoom in on that. We're just going to do some of them. We're not going to do them all. You're going to get the picture. You see the VIX here? You see the bars? Right? You see the bars? It's gotten below the 5-day moving average, below the 9-day moving average, below the 21-day moving average, starting to come down near the 50. Didn't actually get below it, but it started coming toward it. But look at the 5-day moving average trending down, the 9-day moving average trending down, 21-day moving average starting to trend down and flatten out. Prices, the VIX is coming down. The price of the VIX is coming down. You see that? And getting below the 5 and the 9 and the 21, trying to get below the 50. Well, this happened on 12/8/2021, right? Okay, let's go to 12/8/2021 on the Standard & Poor, our gauge of the overall market, right? 12/8/2021. Let's go back to the Standard & Poor. Bing. Now, let's look at 12/8/2021. Okay, let's expand this area and look what happened. The prices, look, y'all, look. Prices went up, tried to come back down, tested the 50-day moving average, bounced off of it, and ran back up. It wasn't a huge pop, but it happened. Okay? It wasn't a huge pop, but it ran up. Bad things are not really going on that bad. It's some good in here. Okay? You see it. Prices went higher. All right? That's what I'm trying to tell you. It's not like the bad things. Okay? Really bad things can happen when that VIX starts to spike. I'm trying to tell you something. Let's go back to that VIX again. Okay? Now, we did that one on 12/8. Let's go to 3/16/2022, back in March. 3/16/2022. Look at the VIX. Look at the VIX right here. Got below the 5-day moving average, below the 9-day, below the 21-day. This time we got below the 50-day. What I tell you, when the VIX get below the 50-day moving average, good things start happening. When it's above the 50-day moving average, bad things start happening. When it's above the middle of the Bollinger Band, expanding above the upper Bollinger Band, bad things happen. But when it start getting down below the 5-day moving average, below the 9, below the 21, below a 50-day moving average, good things can happen, right? Good things can happen. Let's see what happened on 3/16/2022. Let's go back to the Standard & Poor's. Our gauge of the overall market for right now, 3/16/2022. Well, look what happened back in March. Look, we got a pop. Here's 3/16/2022 on the Standard & Poor's. Standard & Poor's jumped above the 5, jumped above the 9, jumped above the 21-day, and started running. We got a little pop. Okay? Well, we know we're in a bear market, so this even works in a bear market. So what you think it's going to do in the bull market when the market is rallying? I told you, if we can survive and thrive in this market, when the bull market takes hold again, we're going to be taking candy from the babies. It's going to be like taking candy from babies. We don't want to take candy from little babies, do we? I know I don't. But it's going to be like taking candy from a baby. It's going to be like a kid in a candy store. That's what it's going to be like, a kid in a candy store. We're going to be eating everything. Ching, 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 ching. Okay? All right? Money, more money, more money, more money. You got what I'm saying? Holla at me. This is what I'm trying to tell you. All right? So look what happens when the VIX gets below its 5-day, 9-day, 21-day, start moving back below the lower Bollinger Band. Good things happen. But when it's above all of that, y'all, when it's above all of that, all jokes aside, for real, right? I'm telling you, this is real now. When it's above all of that, bad things happen. Be careful, because guess what? Guess what, y'all? Right now, we still above an upward trending 5-day moving average. We still above an upward trending 9-day moving average. We still above an upward trending 21-day and an upward trending 50-day moving average. We're above all of that. The MACD got a bullish crossover and it's expanding. Okay, you dig what I'm saying to you? You feeling me? It's not a time to be trying to get courageous. Yes, the market may pop, but when it's going to really pop, we're going to see it coming a mile away. All right, we got our eyes on everything moving. We're not going to miss it. We got our weekly Bollinger Band strategy. We got all our key market breadth indicators. We got Lois, and you know we cannot lose with the stuff Lois use. Okay, we watching all our key moving averages. We watching our weekly charts, our SW charts. We got our eye on everything moving. It's not going to get past us. Okay? I'm just telling you, we got our eye on all the FANG MT stocks. Look, right now today, the FANG MT, they trying to move a little bit. You see it right here. FANG MT right here. I got everything organized here, y'all. I'm not playing around. Okay? We watching everything moving. We already talked about when oil come down. We got all these things. We watching it. So I'm just telling you, y'all, when the VIX is elevated like this, we seen the spike history already happen on the VIX. All right, it's been spiking. We've seen that spike history already happen, and we see that it's not getting below the middle Bollinger Band. Well, that's not really when good things happen. We got to get consistently below the lower Bollinger Band. We want to see the rate of change consistently in the negative, and we want to see the VIX on the daily chart, okay, getting back below the 5-day, 9-day, and 21-day moving average and trying to move below the 50-day moving average. When that stuff is happening, then we're going to start seeing some good things just might happen. Okay? Some good things just might happen. All right? Look, let's look at some of the VIX family and friends. This is just simple stuff, y'all. I'm not going to go too deep. I'm not going to make this too long for you, but look, watch this here. When you look at that volume, right? So this is a chart, right? This is an advancing volume minus in the declining volume. So you want to look for a break above or below the zero line. See this black line here? That's the zero line. See this black? This is gauging the volume, y'all. If the volume ain't there, I keep telling you, we be looking at an on-balance volume and everything like that. If the volume ain't there, it's a problem. A break above or below the zero, a break back above the zero from below is the most positive. Here's the zero line. We well below the zero line. We ain't got to break back above the zero line. That's the most positive stuff, and it's trending down. Yeah, it's getting down toward extremes. So let's see what happened. Okay, let's see if it can improve. But until it does improve, we are not going to get ourselves in any trouble. Okay? Because when it gets back below zero, y'all, it's a problem. When the volume is so negative, the market normally starts to sell off. Look, down here, I got the Standard & Poor's 500 right down here, if you look very closely. You see when we start breaking back below zero and staying consistently below zero? Look at what's happening. Price is down here, got and broke below its 50-day moving average, and now it's coming on down. You see? Then we ran up, got back above zero. We got a little pop, but then we fell right back below the zero line on the volume. Okay? The advancing volume minus the declining volume. The volume was coming out. This is our invisible chart. Okay? The volume is coming out. It's telling us the volume was coming out, y'all. All right? So the volume is out right now. Okay? This is our advancing versus declining volume. Okay? Our invisible chart, we got our moving average right here. This is the 50-day moving average of that volume, this blue line. Okay? That's what you're looking at. This is the 50-day moving average of the data. The data is behind this here. You can't see it. It's behind this. And we smoothed it out with this 50-day moving average. When this 50-day moving average gets below zero, the volume is really bad. And when it's consistently below zero, the Standard & Poor's is usually starting to sell off, y'all. This is what I'm trying to tell you. So this is all I'm telling you. Right now, you're looking at some of the family and friends, okay? You're looking at some of the family and friends. Let's look at another one of the VIX friends, okay? We got the invisible chart. Now let's look at the up-down volume. Okay, let's look at the up-down volume. We did the invisible chart. Let's look at the New York. That was for the New York Stock Exchange, by the way. Then we're looking at the New York Stock Exchange again. The advances minus the decline in volume. Just straight up accumulative. Just adding it up and subtracting it, okay? And the red line is the 50-day moving average. And the red line is a 50-day moving average of that, okay? You see that little red line there? That's a 50-day moving average of this accumulative chart. You just a running total. It's a running total, kind of like the on-balance volume, okay? It's a running total. But look what's happening. It's broken below the 50. It's broken below the 50, right? And it's straight up declining. You see that? It's broken below the 50 and it's straight up declining. It's not good. It's just not good, okay? And if we go down here, let's scroll down a little bit so you can see the Standard & Poor's 500 is at the bottom here, okay? So you can see the volume, the advancing volume minus the declining volume. When this thing is going down, you got more declining volume than advancing volume. That's what it's telling you. And you see it. It's hitting lower lows and lower lows as prices hitting lower lows on the Standard & Poor's down below. Prices hitting lower lows and lower lows. The volume is constantly just coming out. The volume is coming out, y'all. The volume is coming out, okay? We don't have volume coming into the market right now. So this is some of the family and friends for the VIX. When the volume is just constantly coming out, that's not a good thing, okay? This is what I'm trying to tell you. This is the New York Stock Exchange you're looking at, by the way, right? Let's look at the Standard & Poor's 500, right? The volume, advances minus the declining volume, okay? The Standard & Poor's advances minus the declining, the volume, okay? Here it is. This is a daily chart of that, okay? This is a daily chart of that. So look, we got some moving averages there. You know, we like to keep our moving averages there to help us gauge the direction of the trend, right? So you got the 50 in red, and you got the 200-day moving average in crayon. Right here is the red 50-day, 200-day moving average. Look at it. The volume, the advancing minus the decline in volume is going down. So it's telling you it's more decline in volume. This is the Standard & Poor's. Last time we just looked at the NASDAQ. The New York Stock Exchange. Now we're looking at the Standard & Poor's. You see the volume coming out. It's below the 200-day moving average. It's in a downtrend, y'all. Come on. Don't let nobody tell you nothing else. You look at the data. I'm showing you the data. Don't even believe me. Like I told you before, I could be a madman, completely out of my mind. Okay? But I'm telling you, just look at what I'm saying. Just follow what I'm saying. Forget about who's saying it. Just follow what I'm saying and look for yourself. And tell me, am I crazy or crazy as a fox? All right? That's what I want to know. Am I a madman? Am I? Well, you tell me. Okay? Because the register going ching ching. I don't know too many completely madmen completely out of their mind saying ching ching. Okay? But look at the volume coming out. The advancing minus the declining volume for the Standard & Poor's. The volume is coming out. And look at the Standard & Poor's down below. It is breaking down. Okay? The volume is coming out and the Standard & Poor's is breaking down. The volume is coming out and the Standard & Poor's is breaking down. It's right in front of you. This is a running total of the advancing minus the declining volume. If the volume is coming out, they're selling this thing out. The big boys are selling it. They are dumping it. The VIX is elevated. Come on. Right? I'm trying to tell you something. Trying to show you something. Please be careful. Okay? Let's look at the NASDAQ real quick, right? We're going to look at the NASDAQ. Advancing minus the decline in volume, because when this is the VIX family and friends, when they looking like this, the VIX is looking bad, the family and friends looking bad, it's a problem. He got more family too. I'm just showing you a couple of the immediate relatives. You know what I'm saying? I'm just showing you the ones that's right here with him. Okay? Here, let's go to the NASDAQ. This is another invisible chart. The data is behind it. Okay, the data is behind it. You can't see the data. I smoothed it out with this blue line, which is a smooth 50-day moving average of the data. Like I just showed you, to smooth it out so it could be easy to read. Look, I got a note right here for you. Look for breaks above and below the zero line for possible reversals. A break back above the zero from below is the most positive. Now, where is this blue line of the moving average of the data, this 50-day smooth moving average of the data? Where is it at right now? Well below the zero line, y'all. And what is prices doing right now? Collapsing. The bottom is falling out. Why? It's no volume to the upside. They're not buying it yet. The large institutional investors are not buying it yet. When they start buying it, we're going to see it. It just got a little small tick up right now. You see where it's coming down to some of the lows it's been at? You see it? You see some of the lows? Okay? You see some of the extremes? Right? We getting pretty low, but we're not there yet. They're not buying it yet. Okay? They're not buying it yet. As my son say, Daddy, are we there yet? No, we're not there yet. We're not there yet. Okay? Look, this is the zero line. This is the smoothed out data, the 50-day average of the data. When this thing starts getting below the zero line and you see the Standard & Poor's breaking below its 50-day moving average, remember, this is a 50-day moving average of the data, the advancing stocks in the NASDAQ minus the advancing volume minus the declining volume in the NASDAQ, the volume. When it's going down, it's more negative volume than positive. When it's going up, it's more positive volume than negative. Look, it's simple. It's simple when somebody can just show you what it means. Look what the volume is coming out. More down volume than up. Look when it breaks below zero. Look when the Standard & Poor's start breaking below its 50-day moving average. It's a problem. We tried to get back above zero here, right? But look at the Nasdaq, the Standard & Poor's. It couldn't get back above zero. So the volume was coming out. The volume was coming out, y'all. The volume was coming out, okay? So you got the Nasdaq up top, and you got the Standard & Poor's, which is our gauge of the overall market, down here. You can see when the Nasdaq volume was coming out, the market is not doing that well. The volume is coming out, y'all. This is all I'm trying to tell you. This is the invisible chart, all right, for the Nasdaq, right? Now let's just look at the Nasdaq advance and decline in volume, the line itself, not the visible chart now, a running total of the advance in volume minus the decline in volume. You see what's happening here? Okay, for the Nasdaq. Now, this is just a little different, okay? This is the volume right here, a running total of the Nasdaq's advancing minus the decline in volume up here. This is the running total of it, right? Just keeps adding up as a running total, almost like our on balance volume line. You see it? It's making lower lows almost. Hopefully it don't make a swing low right here, okay? But it's not going up, it's going down right now. It's telling you more decline in volume than advance in volume is what it's saying, okay? But down below, we don't have the Standard & Poor's this time. We have the actual Nasdaq. We're going to compare this with the Nasdaq. Now, this is very interesting. You see this Nasdaq? We're going to keep an eye on this. You see this thing getting lower and lower? You see this getting lower and lower? Okay, it's hitting new lows, right? And new lows here, the Nasdaq itself. Well, we're going to keep an eye on this because if I bring this up just a little bit, let me see if I can reduce it. I want to try to get both of them in the same screen if possible. It's a little difficult, right? It's a little difficult. Yeah, right there it is. Look, you see, we're hitting lower lows here. We're hitting higher lows on the volume right now. That might be a bullish divergence. Okay, so we got to keep an eye on it to see if the volume may come in because prices, the Nasdaq itself is making lower lows, but the cumulative total of volume is making higher lows, a bullish divergence. Remember that video we did a couple of days ago, divergences all over the place? Didn't I tell you the Nasdaq, okay, the QQQs, the ETF that tracks the Nasdaq, specifically the Nasdaq 100, didn't I tell you it's making bullish divergences? Go back and look at the video. It's on the channel. We had divergences all over the place, right? Well, here's another one to add to your list. I'm not saying the market is going to bottom right now, but I'm trying to tell you we at extremes. Okay? We talked about it yesterday in our weekly class. All right, look. This is the Nasdaq, the VIX Family and Friends we're talking about, right? So let's keep moving with that. Just know, we're looking for divergence. We're trying to get clues. We're looking for clues. All right, here. We are going to look here now. This is some of the Nasdaq Family and Friends also. Let's make sure we get the first one here. All right, I'm on Market Smith right now, by the way. A few minutes ago, we was on stock charts. Okay, I'm on Market Smith right now. Okay, I just want the data. I don't need no advice. I just need the data. That's what I'm trying to show y'all. All right, I'm not trying to give you financial advice. I'm just trying to show you something to help educate you, not miseducate you like the rest of these idiots trying to do. Miseducate you. No, I'm trying to educate you. I'm trying to help you understand what this thing is really all about and do it safely. I know, you know, this is not financial advice, but wouldn't it be wonderful if it was? Wouldn't it be great? Absolutely great if it was, okay? But it's not. But what if it was? Ching, 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 ching. if it was. Okay? But just watch me. Right now you're looking at some under the hood stuff, right? This is the NASDAQ composite, some moving average lines of the NASDAQ composite. Right here you got the NASDAQ right here. This is an overbought and oversold situation that we're looking at. This red line is the zero line. Right now it's oversold. It's moving down into the negative. It's kind of deep in the negative. When that's happening, the good things don't happen. Up here, you see the NASDAQ up here. This is the NASDAQ. This is the NASDAQ right here, okay? So when this thing is doing like that, good things don't happen when it's like that, okay? Good things don't happen when it's like that. The NASDAQ is up top, okay? Good things don't happen when it's like that, all right? When it start getting back below the zero, it's not really a lot of good things happening when it's breaking below zero. You see the VIX family and friends? You see what I'm saying? Now look, this is right here. This area right here is a 10-day moving average of the up volume and a 10-day moving average of the down volume. The up volume is in blue. The down volume is red. So look, I just told you we got more declining volume than advancing, right? Well, you can see that right here. You see that red line above the blue? Okay, so I'm showing you the data. I'm not asking you to believe me. I could be a madman. I could be crazy as a fox too. Or I could just be acting like I'm out of my mind because I like to have a good time. All right? All right? Okay? I'm trying to get them ducats. All right? Well, look. Right here, you got the up volume. The 10-day moving average of the up volume is in blue. The 10-day moving average of the down volume is in red. Okay? When this red line is above the blue, when the red line is above the blue, that means the down volume is more down volume than up volume over the last 10 days. Is a moving average of it. Look where the red line get above the blue. Is that looking good for the NASDAQ? And then look here. You see where the overbought, oversold is in the negative? You see? So it's not good when the down volume is above the up volume. Look right here again. The red line's above the blue. Tell you the down volume is above the up volume. And look what's happening in the NASDAQ. Look, I'm trying to tell you something. Down here, you got a 10-day moving average of new highs in the blue and new lows in the red. Well, with more stocks making new lows and new highs, do you think the NASDAQ going to be doing good? Of course not. You want to see more stocks making new highs and new lows. You want to see this blue line above it. Look, this red line is above the blue line all the way. That's telling you right there. That's telling you right there that you got more stocks making new lows than new highs. So it's in the oversold situation below the zero line. Prices fall apart. You got the red line, the 10-day moving average of volume to the negative, and the 10-day in red, the 10-day moving average volume positive, up volume in blue. The down volume is above the up volume. That's not good. You see what's happening. And then down here, you got the new highs, 10-day moving average of new highs and new lows. You see the new lows is above the new highs. That's not good. And this is what's happening right now, right? This is the most recent information. Look, it's below the zero line, bad. The red line is above the blue, telling you it's more down volume than up volume, bad. And the new highs is above it's more new lows, and the red line is above the blue. It's more new lows than new highs, bad. So the VIX family and friends are looking bad, okay? It's bad. It's all bad. That's what I'm trying to tell you. It's all bad, right? Now, let's go and look at, that's the NASDAQ. Let's look at another one, okay? Here, we are looking at the New York Stock Exchange Composite. The New York Stock Exchange Composite, okay? That's up top, the New York Stock Exchange. Y'all, we look at the entire market. That's up top, up here. This is New York Stock Exchange. Now we got the same type of stuff. We got the zero line here. When it's overbought, it's above here. When it's oversold, means there's a whole bunch of people selling it. It's below the zero line. Once again, we got here the 10-day moving average of up volume is in blue. And the 10-day moving average of down volume, the bad stuff, is in red. Okay, and then once again, we got the down here, the 10-day moving average of new highs in blue and new lows in red. So the same chart, but this time, instead of being for the NASDAQ, it's for the New York Stock Exchange. So look what happens. We're going to go straight to the most recent data so we can make this quick, because I already went through it, pretty well the first time, even though most people think I'm out of my mind, but I'm not. Okay, so look here. Prices is gotten below the zero line. That's not good. Okay, it's oversold. And look what the market is doing. Look what the New York Stock Exchange is doing. It's falling apart. The red line is above the blue line. So that's telling you the 10-day moving average of down volume is higher than the 10-day moving average of up volume. It's more down volume. We just saw that on the other charts. It's more down volume. And look, the down volume is more down volume. The red cross above the blue, it fell apart. The 10-day moving average of new highs is in blue. The 10-day moving average of new lows is in red. It's more new lows than new highs. The new lows are crossed above the blue. That's not good. That's not good. Good things don't happen when the VIX and its friends are looking like this. Good things happen when the blue gets above the red. That's telling you there's more volume coming in, okay? Positive up volume than down volume. Good things happen when the blue gets above the red over here. That's telling you got more new highs and new lows. Good things happen when this oscillator get above zero and tell you that more people buying. Then you're going to see this New York Stock Exchange going up. But right now, the VIX and friends are telling you the bad things are happening. Bad things are happening, okay? It's all down. When it starts getting better, we'll see it. Let's go to the next chart, okay? Now, very interesting. Very interesting, right? Very interesting. Very interesting. Here is the NASDAQ right here. This is the Amex. We're not looking at that one right now. This is the NASDAQ, right? That's what we're looking at right now, the NASDAQ, okay? You see this NASDAQ making new lows? What is this advance and declining line doing right now? It's kind of settling in a little bit. It's not making as much of an extreme low as the NASDAQ. You see the NASDAQ is very clear that it's making extreme lows, but look, it's making lower lows. But look at the advanced decline line for the NASDAQ. It's not quite doing that. That's a divergence. If this advanced decline line start completely falling apart, then we know it's following the NASDAQ price. But right now, it's telling you that maybe, just maybe, it want to have a bullish divergence. It's not collapsing as hard as the NASDAQ is. Okay, I'm not saying the price is going to go back up. Well, we already know. We're going to know when it's all going back up, because we're going to be watching the VIX and all his friends and family. We're going to be watching our moving averages, our key moving averages on our platforms. We're going to be looking at all the market breadth. We're going to be looking at the FANG MTs. We're going to be watching everything moving. Our advanced decline differential invisible chart. We do our walk with the market every week. We ain't going to miss it. We walking with it. We ain't walking behind it. We try not to get too far ahead of it. We want to walk with the market. So when the market is booming, our bank account, our trading account is booming. Boom, boom, boom. Just completely blowing up. Okay? That's what we're looking for. Right? Now look, let's finish this thing off right here. This is the last one for right now. And this is the Dow Jones, the Standard & Poor's, and then the advanced declining line for the overall broad market. Well, let's see what happens, y'all. You can see here that this is the Dow Jones. It's making lower lows. This is the Standard & Poor's 500. It's making lower lows. Okay, but the advanced decline line, it's trying. It is trying its best to hold on. Can it give us a bottom and the market rallies? Well, time would tell, but we're going to walk with it. We'll see it when it's coming because we're watching everything moving with our good eye. We got both eyes open, but our good eye is watching it very close. When the VIX and his family and friends are looking like this, bad things happen. See you in the next video.